we discussed in the very first hour. We're now just going to have some backup for that. Okay? So is it fine if I go a little bit fast? Yes? Right? So very first myth that we discussed, that investment in stock market is very, very risky. Is it risky? No. Achha, could it be risky in the short term? Yes, it could be risky in the short term, but in the longer term, it should ideally not be risky, right? Take a second. I'm just getting familiar with this new setup. Okay. Yeah, correct. In fact, a very nice quote by Mr. Warren Buffett, that risk comes from not knowing what you're doing. So if we study properly, if we take our decisions based on our analysis, then should we be much more comfortable while investing? Absolutely yes, right? Then if I go on that in the short term, can stock market be risky? Yes, but in the longer term, are they going to be pretty much rewarding? Yes, and for that, I'll just take you to this specific chart. It's there in your notes as well, if I'm not mistaken, right? Can you see these deep cuts? This one, sharp fall. Yes? Can anyone tell me why the stock market crashed here? 2008. The dot-com bubble was before that, 2000. Lehman Brothers crisis. Okay, subprime crisis. For those who are not, Satyam also, multiple points coming at one shot. For those who are not aware about all these things, it's okay. No worries. Okay, in simple words, like I told about war, can it impact the stock market? Yes. Similarly, some external factors. Can they impact the stock market? Yes. Always in a negative way. Will external factors impact the stock market only in a negative way? No. It can be positive also, right? So whatever we saw in the last few years, we saw an ultimate bull run. Okay, very nice uptrend in the market. That was when? Post-corona, post-COVID. So last almost 1.5, 2 years, they've been crazy, sharp rise in the market. Okay, so there can be positive impact on the stock market also. So here you can see, this is the one big cut that you can see. Again, 1 year, there's a fall here there's a fall, here there's a fall, here huge fall. Have a look at this, 1, 2, 3. There's a monthly candle by the way, but huge fall here. Why? This is 2019, 20 almost. Why is this fall? COVID, correct? But after COVID, you can see this, it's going up madly. This is a post-COVID recovery rally. Okay, why, what, when? Slowly and steadily we'll discuss about this. After having a look at this chart, can someone conclude, yes, it is risky? Have a look at these cuts, deep cuts. Can it be risky? In the short term. Correct? But have a look at this from 1991 to whatever till date. Have a look at this. Where were we? This is what, less than barely 2000, like not even 2000. This level is almost 1050. Barely. From there, we have come to almost 18,000. We have crossed 18,000 also. 18,400 something if I'm not mistaken. So we're not talking about what it is today, right? It had crossed 18,400 some days ago. So in the long run, see, to again answer your question. So this is a time span of almost 30 years, huh? 91 to 2021 almost. But if I ask you, any one of your parents or grandparents, were they investing in stock market? One? Yes, parents. Grandparent. Did they have physical shares? Reliance Industries something? Huh? Sorry? HUL. अंदर बहुत दर्द छुपा हुआ है लेकिन वो हंस के बोल रही है आई एम नॉट ओल्ड at that time many IPOs issue prices were very close to face value back in those days. So you can imagine if her grandfather invested in HUL at face value. सबको बहुत दर्द हो रहा है ना? Shit. Why didn't I do that? But now you can tell me, when her grandfather invested within 1 year, could he have celebrated 1 year, 1 year, 2 years, 3 years? Now have a look at that span. Today, she's jealous. If you start your journey today, after 30 years, can you make someone jealous? You can. Okay? Because that time you'll say that, I have this stock at this level. But this will not happen overnight. This will not happen in 1 month, in 1 year. That will happen over a long span. Okay? So this is not risky in the long term. Correct? So can we move on to the next one? Yes, please. Between 91 and 2003, why was it flat? Are there any multiple reasons for that? Yes, multiple points were coming out. So again, if you were to observe that, somewhere around 92 there was a big crash because of Harshad Mehta scam. Then there was recovery. The problem is that it's still somewhere between 0 to 2000. Okay. In fact, this is again a part of one of our last lectures. It is there in your notes also. But the moment I tell, see, he has already started turning pages. Now that is what will happen. We are on the first, second page, and people will be like, what is the data at the 100th page? We'll avoid that. It is very much there. We'll talk about all these explanation points also. Absolutely, no worries on that. Yes, please. Oh, okay. So you're asking me what is this rise and fall in brief? No. Okay. Oh, that is a Nifty level. Nifty is at 17,251. But I'm sure some people who are absolutely newbies, how many of you have not taken even one trade in the market till date? Not even one trade. You can raise your hands. Okay. Don't be shy about that. Don't feel bad about that. Everyone was in that same place some months ago, some days ago, some years ago, whatever. So for these people also, for the benefit of these people, I have to explain what is Nifty. So for those who know about it, they'll be like, we are learning it. It's okay. Okay. So we will talk about that. What is the exact meaning of Nifty? What do we mean by it is at 17,000? As of now, you can imagine. Like we said, the temperature was at 20, but now the temperature is at 45. This is the temperature of our stock market. Rising over the last 30 years. But we are happy with such global warming. Okay. So this will give you a feel of what's happening in the market. So higher the better or lower the better? Higher the better. Okay. Simple explanation as of now. How to decide whether to go for short term or long term? You have seen on the screen right now. What can happen in the short term? Am I saying that it will happen in the short term? Always will make us no. But you should be mentally prepared that things can go terrifically wrong in the short term also. But possibility of you going terrifically wrong in the long term are comparatively less. Okay, number one. Number two, how can you decide short term or long term? For that actually there is something known as fundamental analysis, something known as technical analysis. It's as good as we are wanting to create this huge building about our knowledge of stock market. Today we are just cleaning the floor. Ground leveling chal raha hai. Okay. And slowly, steadily we are building the base so that we can have a very strong knowledge building. So you are asking directly 7th floor question. Okay. So short term, long term. Last lecture when I talk about introduction to fundamental and introduction to technical analysis. Any other question for now? No? Can we go on? Yes? Cool. Yes, please. Absolutely. Correct. Okay. Correct. When you're 45, 50. Okay, fair enough. Good question. She's saying, I'm 35 years of age. See, such a big courage she has. She has told her age in front of everyone. Okay, don't ask me much. Okay. So you're starting at 35, very good. Better late than never. Correct. But then she's saying that I don't want to wait for 30 years from now. 35 plus 30 is 65. I don't want to wait till that time. So this graph shows a 30 years tenure. Let's take for instance, at 50 if you get some money, will you be happy? Somewhere around 45 to 50. So that's a span of how many years? 10 to 15 years. Okay. So let's see from 91, if someone's 91 or 92, whatever. You can see my mouse pointer also. Okay, here. Okay, at the beginning. From here, let's count 15 years. So someone started at 90, 91. From there, 15 years. So till which year should I check? 2005, 6, somewhere around that, yes. So here, market was around, let's say, 1,500 points. Okay, and 2005 is somewhere here. Still, kind of flat. Okay, but this was a span, like here as the question, there were multiple events. Even markets were not that mature at that point. Okay, everyone has heard at least about NSE, National Stock Exchange. That itself came into birth in the 90s. Okay, 94. I'm getting a feeling that I'm teaching my son. Because whenever I tell my son, Acha, your answer is 90, he says 19.2. Okay, 19.2. Okay, so maybe our markets were not mature enough at that phase. Was our economy also going through a lot in the 90s? For those who have seen the 90s, but LPG and all that, correct? Were the governments also comparatively shaky during that time? I'm actually telling some answers here. Multiple events in the 90s. So I think we'll take that decade as still slight exception. So if someone had invested in somewhere around 1990s, still somewhere around 2005, you would have been around 3,000, so double money. In 10 to 15 years, which is not mind blowing. Okay? But I can say NSE started in 1994, okay? Okay, but let's say 6 years from then, and someone started his or her journey in 2000. Now, at least I can say from 2000 markets are mature enough. More and more people may be coming in place. Yes, from 2000. Correct, multiple factors, right? So from 2000, let's count 15 years from here. Achha, tell me what is the level at 2000, somewhere around 2000 only. Correct, na? For those who are not understanding, this right axis is the temperature of Nifty. Right axis is temperature of Nifty. What is the temperature of Nifty in year 2000, tell me? Everyone knows maths, na? Graph. Horizontal. How much was that? 2000. Now, 10 years from there, in 2010. From 2000 to 2010, where are we? Around 6,000. 3 times. Correct, na? From 2000 to 2010. Almost 3 times. Achha, let's say you started in 2006. In 2006, what is the temperature? Around 4,000. And 2016? क्या बात कर रही हो? More than 8,000. Oops, sorry. Somewhere around 8,000 at least. अच्छा, more than this, somewhere around this 8,000. 8, 9, 10, whatever. Way higher than that. And now you can imagine. So I'll take my own example. I started in 2008. I became a chartered accountant in 2008. After Lehman Brothers crisis, I became a chartered accountant. Okay, so dearth in jobs and everything. Worst economic scenario to become a graduate, to become a professional. Okay, so this was the dip when I started seriously. I started my journey in 2006 when I entered CA final. Okay, so now if you want even as a beginner, like absolute beginner, journey started in 2006. So in 2006, you can imagine here, somewhere around 2000. So 6 to 16, and 6 to 21. So 15 years also you're fine, na? 35 to 50, 15 years also you're fine. So 16 to, from 4,000, this horizontal line, right? 2006 is roughly 4,000 to more than almost 18,000, 4 times. Happy? Not bad, na? Not bad. Set your expectations right. You've learned that first. And if you ask me that, am I starting late? Is this a good time to start? I personally believe that India as a country, can see best 10 years in this decade. 2021 to 2030. Super year it can be. Super decade it can be for India. If other things remain constant, ceteris paribus. Okay, no war scenarios and nothing like that. If whatever is going on, usually, our government has planned a lot of things for this decade. A lot of things are coming up. And even if 50-60% of that is achieved, I'm not even saying 100% achieved, even 50-60% of that is achieved, still we can see 10 golden years in the market. Is my thought process. So it's not at all late. You might be entering at the right time. Okay? So 10 to 15 years, everyone is comfortable, na? Yes, very good. Shall we move on? Now say yes. I'm still one, ma'am. Okay, huh? How much money to invest is coming up in our this slide. Third slide. Come to our third myth. We'll skip the second myth for the time being. Third myth is small investors cannot make money from the stock market. Correct? So she's saying, how much money should I put? Tell me at least minimum to start. Okay. Amount can increase to whatever level. So for that I've taken a very basic example. Okay? In Marathi I've also given that. Thembe thembe tale sache. Boon boon se sagar banta hai. Okay. You start small, one day it will become really big. Okay. Just a simple example to prove that. You can see this example maybe on the next page. Okay. Everyone knows Amrutanjan? Married people? Bigger use case. Sorry. My husband is sitting here. Okay. बाद में देखो उसको इधर पहले इधर देखो. Okay. So Amrutanjan everyone knows. Pain relief, headache, everyone. Huh? So now the name is a household name. Very well known brand. Absolutely yes. Now what amazing thing if I get a chance to invest in Amrutanjan company. Because I have not seen the P&L of the company. I have not seen the balance sheet of the company. I know it's really popular. I know that in almost every household you'll see one Amrutanjan bottle. Yes. Now if I had decided that I should invest only one share in Amrutanjan. Only one share. Okay, how much money I would have required and how much money I would have gotten over a period of time. Okay, so what is this table about? If you can check in your notes as well. The table says in January the closing price was, now everyone has to give me answers. In January, what was the closing price of the share? This is 2021 by the way, previous year. 493. February 545. Is this like the temperature of the share also? Correct? Going up is good. Share price is increasing. Okay. Now from Jan to Feb, directly tell me December 935. What is our assumption? We are investing one share on the last day of the month. That is our assumption. Could that be first day of the month also? Yes, somewhere middle of the month, yes, whatever. Okay. He also wants to attend, but right now not allowed. Okay. So assume at the the last day of the month, we invested only in one share. So tell me how many shares we have? First standard mathematics. Correct? How many shares do we have? 12. So here if you can see, the total investment that I did was how much? 8,000. Mouse pointer is 8,619. How? I've just taken a total of all these things, no? Total amount invested. Average price is 718. How did I calculate average price? All these sum divided by 12. Correct? So average price is 718. Tell me how much returns did I get? 30% returns. So how did I calculate 30% for that also? Closing price was 935. And my average amount of investment is 718. So on 713, if I calculate 718, if I calculate 30% and add up to my cost price, it will come to 935. Decent enough return, huh? 30% in a year. Is this way beyond our expectations? See, your perception has changed. Just before we started this lecture, if someone had said 30%, you'd be like, okay. But now you're understanding 30% is also a huge return. Will you get this every single year? Very good, you're giving correct answers. No, not necessarily every year it will be 30%. But can we start small? Can we start with less than 1,000 rupees? Absolutely yes. I would request everyone that on this very stock, I've done a separate video on YouTube as well. Okay, you can search for whatever stock, whatever video references I'm giving. If you want, you can also write down in the notes. This is a video on top 2 stocks under 1,000 rupees. Sorry, I didn't get that. Amrutanjan and Acrysil. Being stockaholic. Yes. Kya baat hai? Otherwise, he said I didn't knew that Amrutanjan is listed on the stock exchange maybe. Correct? So I'll be giving certain video references. If you can write it down. This is top 2 stocks under 1,000. Okay? So Amrutanjan and Acrysil 2 stocks I've discussed. And someone who asked me how do I decide which stock or what short term, long term. You start seeing these lectures. 100% you might not be able to understand. Fair enough. Whatever you understand, grab it. And you can ask me questions. Okay? Someone had one more doubt. Yes, please. No, not necessary. I just taken that as an example. We are taking closing price on the last day of that month in our example. Could it be closing price of a day? Yes. Could it be closing price of a month? Of a week? Whatever. We decide the time duration. In our example, I've taken for the month. Okay. So now is clear. Can we start with as low as less than 1,000 also? Absolutely. Yes. Okay. In fact, now going back to our point about expectations. Correct. This is ICICI Prudential Nifty Index. So someone was also asking about mutual funds. Correct. Instead of investing in stocks, if I invest in mutual funds, how much can I get? So if you check this is 13.85% returns. Okay, where is this mutual fund investing? This mutual fund is investing in directly Nifty. For those who don't know Nifty, we are going to talk about it. Okay. In simple words, if you want to understand what is Nifty, it's as good as investing in top 50 companies of India. For a very layman, this can be a one-liner explanation. Investing in Nifty means investing in top 50 companies of India. Can I say something like HDFC Bank will be in top 50? ICICI Bank, Reliance, TCS, Infosys, all well-known names, all big names in Nifty. Okay, so this is about one example. If you want, I've also got one more data point. I'll quickly show that to you as well. So now have a look at this chart. This chart might not be there in your notes. That's fine. Some charts I've just taken for classroom explanation. Now if you see your 1 year return in mutual fund, you have to tell me answers. How much is the 1 year return if someone had invested in top 50 companies of India? Nifty. This is a Nifty mutual fund. Okay. 1 year return is how much? So we have to check out annualized returns. So, annualized return is like on an average return. Okay. What about 2 years returns? 31% returns. Is this an exceptional return? Yes. 3 years return. Tell me. 23.55%. Is this in totality or annualized return? On an average per year return. Okay, still high? Yes, 23%. 5 year return, 17.34%. And 10 year return, 14.14%. So don't have this conclusion, so always sell off your investment after 2 or 3 years. That's not the right conclusion, okay? In simple words, the point that we were making in the beginning, over a period of 10 years, is this still 14.14%, 14.14%? Is this double than FD? Double than FD? What else do you want? Okay? And will this require your 9:15 to 3:30 time? Can you do a full-time job? Can you be super busy in your job? What is the only thing you have to do? Invest every month without fail. It could be something like an SIP. In simple words, what is an SIP? You tell automatically debit from my account, automatically take from my account X rupees every month. Don't even ask me. I'll give you permission only once. From today for the next 3 years, on this date, deduct money from my account and invest in the top 50 companies of India in Nifty. Is this a classic example of passive income? Any efforts you have to take? No. Just disciplined investing. That's it. Okay? You exercise only once? No. If you want to fit, you have to be exercising regularly. So if you want your portfolio to be fit, ideally. Is there a restriction that you have to put every month? Correct. Forget about it. Possible. I'm not saying this is not possible. I'm not saying this is a wrong strategy. But then the problem is that you can imagine in 2020, January, you invested whatever money you had. And then March 2020. What happened? Market crashed, na? And you know your conclusion. Stock market is a gamble. Instead of that, you had 30,000 rupees, correct? Assume, so roughly around 2.5 thousand per month, roughly around, not exact, okay, 2.5 thousand per month, you had invested. So you invested in January, you invested in February, crash, you invested in March. Little bit recovery, you invested in April, little bit recovery, you invested in May. We have learned the concept of averaging in school. Correct, na? So, do you have clothes for every temperature? Yes. Should you be investing in all temperatures of stock market? Whenever it is hot, invest. Whenever it is average, invest. Whenever it is cold, invest. Keep on investing. Over the long term, you will get the benefits. Okay? Every month. Every month. It's not like right or wrong, okay? It can be like your patience can be really tested. It's more risky. That's what I said. Had you invested in Jan and had it crashed in March, you'd have been like, oh my god, let me save whatever money I have. You might have sold everything and kept it for lifetime. But if you keep on investing in a disciplined way, then over a long term you'll get better results. That is the only thing. Again, if you want to know, go a little bit deeper in that. Write down one more YouTube video. Lump sum investing versus SIP investing. Exact same question of yours. Lump sum means what? At one shot. Lump sum investing or SIP investing. So in that, everyone knows I have some funny pre-bumpers start to my videos. In that video, just to explain what is lump sum investing, I've taken one gulab jamun and put that entire gulab jamun in my mouth. That's lump sum. And what is SIP? I broke that gulab jamun into pieces. One small piece at a time. One small piece at a time. That is more satisfaction. SIP, systematically you are investing. Systematic investment plan, SIP. Okay? So everyone, those who are kind of beginners, write down all those recommendations to videos, watch it. Okay? And that is the reason why we have Monday to Friday break in between. That is the time when you have to watch the videos and come on next Saturday. Okay? Someone else had a question, yes please. Okay. Again the same answer, right? No one stops you from investing lump sum. Which will be better? Always, if you want to have lower risk. That's okay now. Invest in 1 year. Correct. That is a very important point. When you are going from 45 to 60, you have lesser working years in your hand. Would you want to go in for Aaj Kuch Tufani Karte? You have to have lower risk, right? And for that you have to invest slowly. Or you have not, 45 years of age, assume you have 12 lakh rupees. I'm not saying invest 12 lakhs in 12 years. I'm not saying that. Invest 12 lakh rupees in 12 months is what I'm saying. In 1 year at least. Spread it out and then invest. Okay? Yes, please. Okay. Correct. I'll just repeat that question quickly in English. Is it necessary that, madam, you gave example only of Amrutanjal? It means you have to invest only in one stock in 1 year? Not necessary. We can invest in this stock. Next year you feel that no, instead of Amrutanjal, I'll invest in some other stock. You start investing in that stock. Third year you feel another stock. You can keep on changing, number one. Number two, is it necessary that you invest only in one stock? Can you invest in a basket of stocks also? Yes, choice is yours. Okay? Okay. Mm-hmm. Mm-hmm. How to manage that greed? Have you tried answering that how to manage the greed? By setting our expectations right. If you have your expectations very high, greed is 100% going to come in. 100%. But if you know that 12%, 14%, I'm happy. There is a new term which is becoming very popular these days, minimalism. Apply that in stock market also. Minimalism, still I believe double than FD is not truly minimalism, but still don't go in for higher ones. Your greed will never stop if you have not set your expectations right. Okay? You can. See again, SIP or lump sum is just a choice, right? It's just the way you are traveling. Finally, destination is the same, na? You're going to invest 12 lakh rupees, for example. You're going to invest 12 lakh rupees. That is the destination. What is your route? You're either taking a highway, invest at one shot, or you're going to different roads. Slowly, one by one. That can be like slowly. So that's fine. That's your choice. That's your risk appetite. Nothing is bad or good. But if you ask me risk-wise, surely SIP is less risk. Okay? Correct. Absolutely. Absolutely true. It can be like, for example, like whatever he's saying. If I keep on investing in the index, in the top 50 companies, through mutual fund, let us say, for straight 10, 15 years, ideally, will he be getting that 14% return roughly? Yes. Should he be worrying about what happened today, what happened tomorrow? Not really. But then why keep an eye on these events? So, for example, something like an Amrutanjal which was at 9:35 in December. If someone can check what was the price day before yesterday for Amrutanjal when the market's 800 something. So that gives you an opportunity to re-enter in the same stock at a much lower level. Okay. Are you getting my point? Even if you don't look at all these events, that's perfectly fine if you're having a 10 to 15 years perspective. But if you're going to, it's like keeping an eye on the Amazon Great Day Sale. What do they call that? Great Indian Festival. First answer from girls. Great Indian Festival. Why? Huge discounts. Whenever such news come up in the market, it's like a great Indian discount, great Indian sale on the stock market. That's a day when you can get quality stocks at lower price. So it's your choice whether you want to invest in that discount or not. No. Won't be a drastic difference in income, but I can say 90-95% of the people. 5% of the people will be in that category which have made extreme losses, or maybe very good profits also. Very professional traders. They can be in that category. But if you're asking me 95% Aam Janata, who have above average knowledge, not in front of the screens 9:15 to 3:30, you will be earning better as compared to an intraday trader over a long term. Okay? So with that, our first myth is done. First myth was what? If you can tell me. Very risky. Now everyone is very clear on that. Second myth. We need very strong knowledge. Okay, I think it's there on the screen, right? Okay, second one, you need to have very strong knowledge about finance. If I want to give you quick examples, few more examples, you can see Vijay Kedia. Heard his name? Very famous person in the stock market, by the way. Okay, try googling out these names if you want. You can see how popular these are. And it's always fun to read how much is their investment portfolio worth. Okay, that gives us some target that maybe someday, at least 1/10 of that, I'll have that much portfolio, right? So Mr. Vijay Kedia, what is his educational qualification? BCom. No fancy professional degree, only BCom. Okay? Porinju Veliath, again a very well-known name in small cap investing, in small companies. Educational qualification? Law graduate. Not pure commerce, pure finance. Third example, Ramesh Damani. Radhakishan Damani is demanded. Okay, that's okay. Damani to hai. Okay. Ramesh Damani, educational qualification, HR specialization, nothing to do with stock market. Mr. Radhakishan Damani is undergraduate. Warren Buffett. Oh, this person everyone knows. Yes, the god of stock market is what people call him. You heard about Warren Buffett? Abhi, in the notes. Started watching. Okay, cool. He's almost 92 or 90 plus years of age. And see at what age he started investing? 11. Still he always believes that I started late. Other Indian people say, ऐसे रतलू ही है वो. But you can imagine, he was a person who used to throw newspapers. Newspaper डालता था लोगों के घर पे. And it is said that while delivering newspapers, that is when he started reading the newspapers, started getting more and more inquisitive about stock market and all whatever is happening around him. And that is how he started his journey. And now you can imagine that from 11 years of investing till 90 plus of investing, that's a huge span of more than 75, 80 years now. And what enormous wealth this person has today. So even if you believe that I started at whatever 35, I'm starting at 40. There is one person, maybe some person in your family, maybe your kid or maybe your brother, sister's kid, who might be this age. How many of you in your family either have kids at your home or maybe in your near family at this age, somewhere around in their teens? If you can raise your hand, in their teens, amongst at least your family members, yes. You're a teenager. क्या बात है? Teenager? तुमको शक्ल से teenager लगता है. How many teenagers here? Wow, 1, 2, 3, 4. तुम भी teenager? Very nice. I'm also fantastic. Very nice. When I was 18 years of age, 12th standard roughly. नहीं कहाँ हो? 12th standard. So you're in 12th or what? No. Second year. 11th. Youngest? 11th. क्या बात है? Very nice. Youngest kid in the class is 11th standard. 60 years of age? 45? 68 years of age. Anyone above 60? Oh, wow. Amazing. So I think this, oh, wow. क्या बात है? Wow, amazing. Very nice. What a moment. So this is actually, educating generations for a feeling. That blessed children, he's saying. Very nice. No, otherwise parents are like, what nonsense you're learning about stock market and all that. First, only Puna. Stock market suckers.
I think this is the general point of view of society reading stock market. No,
correct.
I just came by my parents.
So that is, not fault of your parents, I can say, but that's a fault of the society in general, I can say, but correct. But I'm glad that this trend has maybe slowly started to change at least. I can't say completely change, but slowly started to change. But the 11th standard girl, what's her age? 17 to 68. What a range. Age is just a number, na? Yes, there's no age for investing, for learning, nothing. It's just, this is what I was saying, willingness to learn. And not the ability to learn that matters, right? Fantastic. So the point that I was trying to make here is that even if you have started late, encourage the kids around you who are in their teenage maybe, that you start investing, you start learning at least. So otherwise, we'll always give next batch, I'll always give example only of Warren Buffett. I should be able to give example, one of my students. Started investing at a very young age of 18. So such examples, more and more examples I should be giving in the classroom in the upcoming batches. So encourage people in your family, around your family as well, right? So not necessary that you should have absolute fancy degrees in the field of finance. Third myth we've already done. Yes, that small investors cannot make money from stock market. For that we have taken example, right, of amounts less than 1,000 rupees. We also talked about an SIP in the stock market. I also gave you 10-year data, 20, whatever, long-term data also. Myth number 4, very interesting myth. We're on to the last almost 5 or 10 minutes before the break, okay? So even if you're hungry, stay hungry for knowledge first 10 minutes. Okay, stay hungry, stay fresh, yes. So the next myth that we want to address is renowned companies can never give strong returns. Always people say, try and find the gems in the stock market which are undervalued. Then only will get fantastic returns. To be really honest, it's not easy to find gems. I myself till now might have found barely 2 or 3 multibaggers. But finding all the multibaggers in your portfolio, again, only liar. 100% multibaggers in the portfolio, impossible. So if I'm not that comfortable, can I invest in very renowned companies and still get better returns? Yes, we have set our expectations right. Correct? When will I be happy? Double than FD? More than happy? Yes. Now have a look at this. For a company like SBI, State Bank of India, everyone knows, correct? There, instead of sales, it can be something like revenue. What is the revenue for a State Bank of India? Interest, absolutely. See, if I'm SBI, I'll be giving loans. Correct? No? I'll be giving loans. What will I earn? Interest. So that is my income. See, income has grown at what percentage? 5%. That's something on a CAGR. It's compounded annual growth rate. Okay, for those who don't know the full form, we are going to discuss about what is CAGR at length in the coming lectures. But as of now, we want to write down the full form. CAGR is compounded annual growth rate. Annualized, whatever. Okay, compounded annual growth rate. Okay, in simple words, right now I'm not going into the definitions and nitty-gritty. Can I say on an average 1 year return? Compounded annual growth rate is on an average for 1 year. How much sales has grown at the rate of 5%? So interest income has grown at the rate of 5%. In simple words, if previous year State Bank of India had earned 100 rupees as interest, this year they might have earned 105 rupees. On an average per year, 5 rupees. Does it mean every year 5%? Could it be 10% in 1 year? Could it be 2% in another year? Are you getting my point? How CAGR is calculated? What is the interpretation of CAGR? 5% CAGR does not mean 5% every single year. It means 5% on an average. Is this okay? It can be higher than that, can be lower than that, average. But how much has their profit grown at? Profit has grown at 13% rate. Is this showing much more efficiency from the stock? Profit is higher than sale. Now have a look at what happened with the stock price. Last 6 years CAGR. Is this there in your notes also? Last 6 years CAGR. What is the stock price growth? At, on an average, 22% growth. So now all those uncles and aunties in your neighborhood, if you ask them, where have you done your FD? They'll say in SBI. Why? Very safe. What do they mean by very safe? Government, okay, but very safe simple means capital remains intact. Okay, from the other side of the table, I believe that your company डूबेगा नहीं. The bank will not shut down forever. Can I say that is a simple meaning of safe? Okay, you believe that the company will not shut down forever. So instead of doing an FD in the bank, had you bought the shares of the same company, not even different company, same company, you would have gotten 3 times. Are you getting the difference? Yes. And is this even much higher than our expectation? Had we even gotten 14%, still happy? So this example actually takes care of 2 myths. One myth is, first myth is what? Renowned companies like SBI, they can never give strong returns. Is 21%, 22% absolute classic case of a strong return? Yes. And number 2, purchase them पैसा double? No, nahi hoga. You will follow a slow and steady wins the race kind of a path, right? You will surely get it right. In fact, last example that I've given, same page, last bullet point, about 99, read that out, fun fact, about 99.7% of Warren Buffett's immense wealth was earned after his 52nd birthday. And he started investing at 11. Immense wealth, that is the word, but Buffett's portfolio has yielded 20% CAGR over the last 53 years. A superb investor, a very intelligent investor, a person who everyone respects him as an investor. Still that person is making 20% returns. And that is what is the last hashtag? Set your expectations, right? You'll never make mistakes. Is this clear? Day one, I'm fitting some things in your mind. I hope I'm able to do that. Expectations right. Last myth, stock market is not for women. This is the last one before we break. ये market सबका है बस. Correct? I loved that advertisement. And वहाँ पे in that advertisement it had given various examples. That even a person who is in his teenage or in his 60s, or maybe even if she is a homemaker or if she is a lawyer or something like that. So no profession, age bar. I mean no profession restriction, no age bar restriction. Nothing related to whether that person is owning a Mercedes car or is going on a scooty pep. No discrimination on that as well. So anyone and everyone can enter this place. ये market सबका है बस. I just love the tagline as well. So just no paid advertisement. I'm doing for that. Just I love this theme. That's why I've taken it in our notes. Classic examples. Women investing in stock market. I will talk about Mrs. Bhagyashree Phatak. Ajeen Marathi's grandma, by the way. I just love to write that. Scientist Ajee also talk about. Kalpana Moraparia. Those who have watched few of my videos, I've talked about Kalpana Moraparia in one of the videos. ICICI Bank video. Okay, and in fact in that I had given a quiz. Do you know who that lady is? So I've not talked about her, but she has done a fantastic job at ICICI Bank. Again, if you can just Google out who she is, what she did for ICICI Bank. Mind blowing, huh? Okay. Radhika Gupta, have you heard recently in one of my videos? Budget analysis videos. She's very famous. Born and brought up in a normal family, but done exceptionally well in her investing career. She started her own mutual fund kind of a thing, sold it to Edelweiss, and now she heads Edelweiss. So again, mind blowing story. Scientist Ajay, I'll give her example. She's one of my students. I want more and more examples like these in our batch afterwards. Okay? Almost a 60 plus age lady, and she always, many a times she attends my Zoom meetings. I keep Zoom meetings for those who have signed up for my courses. So we all will also meet in a Zoom meeting every month, okay? From next month, yes, absolutely. So in one of such Zoom meetings, she started asking me certain questions, okay? And I just asked her, ma'am, have you been connected with the finance field? Because the level of questions she was asking was really good, okay? And I asked that, have you done your career in finance? She said, I was a scientist at ISRO. And I was like, what are you doing in my class then? She said, this was one thing which I always wanted to learn but never got time because of my career. But it's never too late, right? You always say that on your channel is what she was telling me. And she said, even if I start investing at 60, 10 years is more than enough. You always say, till 70 at least I want to earn some decent money. That is the spirit. At least I can say she was, super qualified, having a great work exposure. Maybe that is the reason why she, picked up very quickly. This example of Mrs. Bhagyashree Phatak. Super inspirational lady. Super inspirational. If I'm not mistaken, she's from Thane. Yes? क्या बात है? So if क्या बात है? Very nice. Till date I have not met her in person. I wish I will surely make it a point and visit her once. She might be around 60, 65. And just excuse me for my words. आपल्याला लाजवेल माहिती का अक्षरशः लाजवतील त्या. Listen to her lectures. She'll start talking about crude oil prices, this, that, world war scenario, US bond yields, and first time I heard her, I was like, I'm not able to close my mouth. Absolutely. Anything from macroeconomics to microeconomics, politics, and everything, how it impacts stock market. And then I just googled her, who is she, how does she know so much about stock market? Her story is something like this. A normal, regular housewife, okay, was not into stock markets until both of her children got married. When both of her children got married, she said, now what do I do? And that is a very tough phase for many housewives. Because till that time, their kids are their entire universe. And all of a sudden, there's a big void, absolutely void vacuum in their lives. And that is the time when you make a choice. What next? Now, some might say that aise hi chalte rahega. What to do? I'll try and search for some hobbies, or maybe otherwise Marathi is a classic fallback. And that was the time she said that her husband used to watch stock market related channels, something like CNBC or Z Business or whatever. And she said every day while cooking, she has certain videos on YouTube. She started listening to that while cooking. Slowly, steadily, she started getting interest in that. Then she said, I used to get up early, finish my cooking, and then sit in front of the television with my husband from 8 in the morning. And slowly, steadily, she said, I started picking up so much that even today, at the age of 65, she said that I finish my cooking before 9:15 because I have to be in front of the market from 9:15 to 3:30. Very inspiring. And please watch her. Even if you don't understand Marathi, that's absolutely fine. If you're okay, after today's lecture, I can show one clip. It's available on YouTube. Mind blowing. If someone can start learning at the age of 50 plus for sure, when both her kids got married, at the age of 50, if someone can start, and at 65, you can become like super pro. Her story has been covered by BBC. At the age of 65, you're such a pro. Why can't we? We have no excuses, right? So, no gender bias, no age bias, no educational qualification bias, no bias for short term, long term, or amount or whatever. Are you all set with your basics, right? Yes? Yes? All right, so I'm sure energy is a little bit low, everyone is hungry. So take a break, half an hour break, have lunch, have breakfast, have tea, and we'll get back for the second session. Thank you.